Hello everyone. I wanted to differentiate the concept of this video a bit more. I know that the viewers who have been following the videos on this channel from the beginning have made significant progress in technical analysis education because I received positive feedback that they have increased their earnings, and it makes me very happy. As you know, on my channel, I have been sharing the experiences I have gained over the years with you without expecting anything in return. My only request from you is to press the like button to reach a broader audience. The YouTube algorithm increases or decreases the visibility of content based on the number of likes. In this video, we will specifically analyze the price movement itself and enhance our experience without adding too many indicators. Let's get started. Price always creates a resting place for itself in a certain region. In these areas, there are usually orders from buyers and sellers. On the screen, you can see two stages where a falling trend pauses and the price consolidates. Due to the overall downward trend, consolidation zones are forming lower steps. After the price enters the second stage declining consolidation zone, buyers want to push it back up, but after a few tests, there is a significant buyer-seller equilibrium, and we clearly see a bearish engulfing candlestick formation in favor of the sellers. Market makers and major investors will likely place sell orders again in the area where they probably emerged victorious. This is the reason for this region being an order block. After the price breaks down by the sellers, very short-term sellers will exit the market, taking their profits, and the price will most likely revisit the order block. Another lower step formed, and here the group of buyers prevented the price from falling further, breaking this region to the upside, and the price returned to our designated order block. In this area, it is highly likely that the orders of large capital sellers will come into play. Small investors like us will follow suit when we see this price action and make money. Now, we will draw a minor support line at the lower levels of the candlesticks that visit the region and wait for it to be broken. With the break of this interim support line, we will seek additional confirmation for a safer trade. The stop-loss level should be placed above the region where the price consolidates or above the upper limit of the broad consolidation zone. This can be shaped by the trader's risk management. We can set profit targets in two stages. As the first target, we can align it with the major low zone that formed recently. As the second main target, we draw the Fibonacci tool from the highest point to a lower level, but please pay attention. The price must have visited the 0.236 to 0.618 range from the dip level from which you drew the Fibonacci tool, otherwise, the levels of the Fibonacci tool you drew will not work correctly. This is a very important point. Let's now examine how the price action in the market unfolds before a falling trend reverses to the upside and how you can profit from reversal trading. There are two important formations that occur during trend reversals. One of them is the shoulder, head, shoulders formation, and the other is the cup and handle formation. If these two formations occur in the opposite direction, they are called the inverse shoulder, head, shoulders, and the inverse cup and handle formations. As you can predict, regular formations turn a downtrend into an uptrend, while inverse formations turn an uptrend into a downtrend. Statistically, the probability of these formations working out is equivalent to 65%, which is quite high in stock trading. Let's carefully examine an example related to the topic and learn from it. There's a formation on the screen indicating that a downtrend is approaching its end. Take a close look. Continuously paying attention to candlesticks will eventually enable you to instantly spot formations. You can be sure of it. Here, we also see an inverse head and shoulders formation. This means that an upward movement may occur in the near future. Of course, as the formation was taking shape, it also created a significant support area at the bottom. It's essential to mark this zone as well because if a long position trading opportunity arises, we can set the lower part of the support area as our stop loss level. While the formation was taking shape, the retail investors fell into a trap with this false upward movement orchestrated by market makers. This bull trap is an action taken to deceive amateur, impatient, and inexperienced investors without technical analysis knowledge, leading them to losses and collecting the capital they leave behind. That's why please watch all the videos without skipping. I'm trying to teach you all the details on how to increase your capital without losing your money. We can see that we were right in thinking that the downtrend would reverse. In fact, shortly after the price started to rise, a cup and handle formation formed within the trend, further strengthening the uptrend. Now, please pay attention. The cup and handle formation also formed within the uptrend. If this formation had been an inverse cup and handle, we would have discussed that selling pressure was increasing in the market, and entering a long trade would not be a correct approach. And as you can see, with both of these formations in place, the uptrend in the market continues, and the buyer group seems to have taken complete control. This is when we can start following the price, once we have correctly identified this and received the necessary confirmations. It appears that we have captured a very strong uptrend from the very bottom. It can certainly be described as an excellent analysis. Please do not hesitate to support us. Thanks. In this example, let's learn how to enter at the right place and make a profit by identifying divergence with one of the most popular indicators, RSI. Let's even see how to avoid a bull trap during the price movement. As you can see, while the price is continuously making higher peaks, the RSI indicator is forming lower peaks, indicating that the strength of the aggressive uptrend is starting to weaken, and a downward reversal is imminent. Now, please pay attention. When we draw a resistance zone from the point where the divergence movement began, we can see that the price has broken above this zone and has formed another divergence above the resistance area. Here, despite the weakening trend strength, we notice a trap set by the buyer group in the market. An action to eliminate the long position trades opened by amateur and uneducated investors in the market, who often engage in trading as if it were gambling. And we understood that the resistance zone did not function as support, as it was breached sharply to the downside. Now, due to the sharp upward and then downward break of the zone we identified, entering a short position immediately is not the most preferred option. Of course, there is an entry opportunity here. You can open a trade by placing a stop loss just above the zone. However, I recommend waiting for the critical support level, as seen on the screen, to be breached. This way, we can be sure that the seller group has taken control of the market and that a downtrend is forming. As a result of the price leaning on the last critical support line we drew, the market traded sideways for a while, and eventually, this support line was also broken to the downside. My preference would be to open a trade from the closing level of this candlestick. Yes, we've made a nice trade. The profit percentage is not bad. So, shall we learn why the price dropped all the way here and then reversed upwards? This is where the Fibonacci tool, which allows us to measure all the movements in the market, always comes into play. Let's draw the levels from the peak level to the critical line. The peak level should represent 0, and our critical line should represent level 1. As you can see, the price retraces between the 1.618 and 2 coefficients, and since this zone signifies a potential correction area, the price starts an upward correction response. Dear friends, during the week, I share videos with shorts to demonstrate the correct usage of indicators and various trading strategies. I recommend turning on the notification bell so you don't miss out on the content. Goodbye.